Consumers will have to tighten their belts. Interest rate hikes are on the cards.
The protracted labour strikes, that we've had, we are seeing the effects. If you look at Rustenburg as a town, you go out there and you see a large number of, spillover effects. And these are all the things that sometimes, we fail to when we look at the macro statistics, you don't really appreciate some of the micro dynamics, that we have. So the solutions may not be easy. There may not be some things we can say, these are the 10 solutions, but there definitely is a recognition that more needs to be done. So from the consumer's point of view, I think one needs to be circumspect. One needs to look at, how one handles one's budgets, income, etc. Going forward, there are definitely tough times ahead.
The economy is under pressure. Creating employment remains one of the key issues and has a direct impact on economic stability and growth.
From a domestic point of view, the economy remains vulnerable to supply shocks, and here in particular we think about the unreliable supply of electricity, which of course, as we know, is affecting mining as well as manufacturing output in South Africa, but also capital formation in South Africa. A further risk will be the fractious labour relations environment as well as the protracted strikes that is evident in the South African economy, experience in the economy, which is then undermining not only investor confidence, but also economic growth as well as employment.
Factors like continued upward pressure on inflation, rising food prices and higher wage demands, among others, contribute to the data.
We are in a tightening cycle. What I can't tell you is the percentage increase and over what period, because obviously that we also said is dependent on the data. But we have clearly articulated that we are in an interest rate hiking cycle, which therefore implies that the most likely move is up.
The country's growth has been revised from 2.6% to 2.1%. Francois Groepe, SABC News, Cape Town.